And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market prep for Monday, March the 13th. Lucky Monday the 13th here, traders. My name is John Hoagland. Thanks for trusting me with your time. Of course, we're going to be attempting to find accurate context today, always thinking about risk management first and trying to remain patient in our markets. We know that we've got things a little awry here in the markets and in the banking systems. So we've got some really volatile things going on. The market seems to be changing almost by the minute. Is going to be an extremely challenging trading day. These are not my favorite trading days, I can tell you that. When volatility hits, I tend to try and slow down. I think there's going to be a big expectation for some big opportunities today, and they do exist for day traders, for traders overall. However, I think that pushes traders, it drives traders to trade more aggressively because those opportunities are out there. There is also the opportunity for substantial loss on days like today, and believe me, I've experienced both in my experience in trading. So I'm going to try and remain calm, take a deep breath early, and try and see what's going on in the markets. Now, as far as the equity futures are concerned, today into tomorrow is switch day. They're in rollover. So not only have we expanded volatility, we've reduced liquidity because the volume is split between the June and the March contracts. Think about that. You're not going to have as thick a market in either one. I'm still looking at the March contract today. By tomorrow, I will be switching over to the June contract. But it doesn't change the fact that a lot of the volatility is now split between the two of them. A lot of the liquidity is split between the two of them, so the market is going to be more likely to move further, faster. Keep that in mind. Obviously, uncertainties have these markets responding to that information minute by minute. Markets hate uncertainty. The Fed and the Treasury have assured that all depositors will get full access to their funds starting today for two of the banks currently known to be in the threat of collapse. The question of contagion through the system, of course, remains. That's on everybody's mind, and it's evident in the markets today. We've got the S&Ps already trading down to weekly kickoff low or relatively close to it. The S&P, the Dow are the weaker ones. The NASDAQ, not so full of banks, is holding up much better. We've got the S&Ps down 1.3%, the NASDAQ down 1.1%, the Dow down 1.1%. Things are getting a little bit hairy, and they're going to be. I'm going to probably avoid looking at my 401k for the next few days or weeks. The president is supposed to speak today at 8 a.m. Central to hopefully allay some of the fears. I don't know how much he's going to be able to help. Many investors and banks are now expecting little or no change in rates next week. If there is a silver lining to this, maybe that's what it is. So a lot of folks trying to shore up the situation that we have at hand. And of course, things are changing as we speak. As we speak, things are changing, very volatile, very illiquid. And again, I'm going to be really thinking twice before getting into anything. Hopefully, maybe some things will come to light before we have make-whole money at 2 o'clock today. We'll have to see how these things play out. Of course, we'll be having group coaching as usual at 12:30. Just protect yourself. You can do well on days today. You can survive days like today, but you can also, days like today can be career enders or at least account enders. We don't want that to happen to anybody, of course. Make sure that you're well aware. Look at the VIX. It's up 17% last I checked at 29.03 was the last number I saw. Dollar index down 104.14 last I checked. The yield on the 10-year down 3.4%. So things obviously volatile, moving fast. Not going to be probably respecting any short time frame levels, longer time frame levels. See what you got. Be careful today. Make sure you hit the lucky like button. We're going to need a little bit of luck today. Share, comment, question, feedback, heckling, love are always welcome. Make sure you subscribe to our YouTube channel. You get notified when we do go live. Again, we will be having group coaching today at 12:30 as usual, and we will be having Make Hogue Money at 2 o'clock as usual, followed by a brief reflection of what happened in the markets today. My hope for you, our hope for all of you is that you have a successful trading day, whether that means finding some ways to turn profits today or just sitting and watching and protecting yourself. Either one, you're going to come out a winner today. What we don't want is for you to get involved, to get upset, overdo things, and have things go south on you. We don't want that for anybody, of course. So good morning, Shaw. It is going to be a heck of a week. Jay, Timothy, good morning, Rick. It is certainly going to be interesting. My brother Tom is here, too. I got both my brothers here. I love that. Love you guys. John, good morning, Rooster. Back from a little vacation. Incredibly interesting morning, right, Kevin? NASDAQ, Rooster, taking a few trades last night, was too tempted to hold off until today. Jason, good morning. Dan Trader. One of those days I'm wearing I think this is my rally sweater, and I like what Kevin had to say down below. I hope he's wearing a flak jacket because that might be what we need today, right? Bill, good morning. Zach, good morning. Kevin, again, there's the flak jacket. Terry King, Steven, Kevin with an interesting thought here about what this is going to possibly mean to a timely rising of the debt ceiling. We got some time for that. Hopefully this doesn't turn into something that lasts that long, right? Charles, Khalid, Brian, shorted 60 area and running. My goodness. Thank you, Tom. Nice sweater. German on the ES. Zach, good. Top of the morning, Chad, Sarah, all good morning. Prayers and love to you as well. Shy T, good morning. Where am I? Travis, good morning. JT, Rusty Golfer, Vince, Haggle Matters, Shaw. When Ben should kill it, and Rick will be Brown Bear King, right? Crowned Bear King. Too humble. Can we speak about overnight high being at the high of Friday for rejection in respect to the volume and profile TPO? Yes, we will take a look at that. Too humble. Stocks COVID. Good morning, Ed. Good morning, White House. Good morning, Bruce. Ashraf. Good morning, Orion, Shaw, Razvan. Stock. Today is my first day in the funded account. My goodness, stocks COVID. Congratulations first. Make sure you take care of yourself today. Make sure you take good opportunities. It's awfully dark this morning, Andy. Yeah, right. Are we rolling forward today? I'm trading the March contract today, still in S&Ps. Volume is just about even. I expect by the end of the day that the June volume will be greater, but I'm going to probably stick with March through the day today and then switch to the June contract tomorrow. If you are here on time, you made sure that you took note of the time change that we had over the weekend. As the older I get, the more it seems to affect me, but I'm feeling pretty good, pretty rested today, and I'm ready to do what I'm going to do today. I don't know what I'm going to do. I'm going to use market-generated information to see if I can find opportunities where I can limit my risk for bigger opportunities. That's my only goal, is to stay out of trouble. Taurus Trader, hey, it's good to see you. I don't think I've seen you for a while, and I do see a couple of new names here, so thank you very much for chiming in and saying good morning. We're going to take a look at these charts and see if there's anything in there that's going to help us today. We're going to start with the E-mini S&Ps, and let's take a look. So we know we're in rollover, and so much for our longer time frame traders having a easy and peaceful rollover. Obviously, things are directional, things are illiquid and volatile. This is going to be a challenging rollover for our longer time frame traders. And if we look at where the market just traded down to 38.08, that is the weekly kickoff low. Within 3 ticks of it already this morning, prior to the regular trading hour open. So today is the last day for March. Going to be trading June tomorrow. I believe there is a, let me see here. Hang on. About a 30-point premium June to March. So we'll adjust our levels tonight and be ready again for tomorrow. So what are the downers that seem to be controlling the market right now? Obviously, we have uncertainties in banking. We also have a technical breakout to the downside. Here's that February low everybody was focusing on. We left excess. We have a head and shoulders pattern. The neckline we broke through on Thursday, continuation on Friday. Friday's volume was very good in the New York Stock Exchange, 5.4 billion shares traded. So the auction to the downside seems to be healthy. We added 147,000 contracts in the S&Ps. A lot of that is due to rollover. There was 370,000 added in June. Now, that's a little bit big for rollover. I'm looking at that as a new participation push to the downside. So technically, February low, the first low in March low is the first low since October's low, which is way back here. So technically, we've got a downside move in process. Where is the possible outcome of this? It takes us all the way down to 3660, 3650. The measured move from the top of the head to the neckline, from the neckline lower, that's about what it takes us down to. And we're already seeing a little, well, unfortunate help from the banking system here. So, obviously, if you've been watching the markets at all this morning, watching it all last night, there is a hypersensitivity right now to anything that comes out about the current banking situation. The market is going to be on a hair trigger if anything good or bad comes out from this. Anything can happen. Remember, that's our acronym here is ACH, anything can happen. Trade what you see. Use your greatest trading experience to make sure you understand what you're getting yourself into if you're going to be playing these markets. I've been at this for 30 years. I'm questioning whether I'm even going to get involved. I know over time things will settle and I will find more reasonable opportunities with less risk and better potential obvious profit targets. Let's take a look at the 30-minute chart here. So really, prior to this push to the downside, I saw that we really didn't have much as far as overnight inventory is concerned, perhaps a little bit to the short side. We were looking at this market as overnight inside extended trading hour range from Friday. It was pointed out in the chat here that, yes, our overnight high lines up relatively nicely with Friday's high. The Fridays where we ran into sellers and started to continue to push this market lower. So, this is an obvious short time frame level, and when the market is in rollover, the longer time frame tries to focus on the rollover, not being directional. Of course, they're being forced to do so now with the current situation. There is indecision everywhere. So for right now, I'm just, looking at this weekly kickoff low as potential structure for an opportunity later on in the regular trading hour session. The market drove there and would not continue, showing a little bit of excess down there. This looks like an area where I might actually think about dropping a line in the water and seeing if I can't find a nice big fat walleye or something, some kind of fish down here. It's my level, These are levels that I look for opportunities at, with greater frequency. So, again, indecision everywhere. If you start getting in trouble and you start getting upset, you start getting mad, you start feeling venom in your veins, better step away. If you do manage to pull out, if you do manage to have a big day after something like that, it just enforces bad behavior. Let's take a look at the TPO chart from Friday. Normal variation day, bit of a trend day to the downside. TPO point of control central, so this is a neutral day. But we're seeing the market continuing to try and push lower. Here's that overnight high, pretty much close to the high from Friday. And we're seeing the market continue to try and push down towards and to that weekly kickoff level. If you're not watching Twitter, if you're not watching the wires, you've got to make sure you protect yourself today. Got to make sure you protect yourself. Biden speaking right now. I'll see if I see anything come across the wires or on Twitter while he's speaking. Hang on a second here. We want to be pretty much up to the minute or a second with the news here. Biden says the FDIC has taken control of SBF's Signature Bank's assets. Quick administration action should give Americans confidence that the banking system is safe. No losses will be borne by U.S. taxpayers. Money will come from insurance fund fees. The FDIC. All right, so again, we're not open. Looks like we may or may not open with a gap. Things are changing minute to minute here. Be careful. Look at crude oil. Crude oil finally, unfortunately, due to questions whether demand is going to maintain through all of this, has finally broken out of its balance area, its range. It is down big today. It is coming into rollover, which may mean that that volatility may try the longer time frame may not be as involved in directional activity, but they will be if they are forced. So 1, 2, 3, weekly kickoff low. We're through that. We're through this trend line. There's space down below here. Every time the market got down around $70, that's where the White House said they were going to start replenishing the strategic petroleum reserve. Who knows if that's still on the plate? We're looking at a possible continuation move to the downside here. Here's the 30-minute chart. So obviously we've opened with a gap. Gap rules apply. We've opened through the weekly kickoff low. If we do get an opportunity back at that level, it might be worthwhile to think about using that level to manage risk. No guarantee of a successful trade there, but just the fact that it remains there it has been run through in the overnight, may end up being resistance in the opposite direction to the upside if we do get that opportunity to see it up there. Okay, that takes us all the way up to what it was weekly kickoff low here, 73.90. 73.90. I'll look at that to see if maybe I want to throw a line in the water and see if I can't catch a nice sturgeon. Here we go. NASDAQ. Not as in bad or dire a situation as the S&Ps. Here's that February, that's the March low. Here's the February low. So we're finally really showing some acceptance below that level. We do not have that same technical situation as we do in the S&Ps with the head and shoulders. The NASDAQ is holding up better than the other equities. We've got the Dow currently down 282 points and off its low. Again, it's rollover. Before this break to the downside here, it was inside extended trading hour range. Remember that there's going to be less liquidity on a high volatility day. This market is going to move further faster. There's a lot more space below in the NASDAQ than in the S&Ps to the weekly kickoff low here, as you can see. Here's the 30-minute. Again, yesterday's high, our overnight high, short time frame level overnight. Overnight inventory, a little long to the upside, pulling back. Now, again, trying to push to the downside. We got to an old TPO, an old volume point of control here, but that's during regular trading hours session. Lacey's going to be going a little bit crazy here for a couple of minutes. I've got somebody coming into the house. So let's take a look at the TPO chart here. And again, Friday, I should say, not a very strong low. We've got excess at the high. The initial balance, neither the extreme high or the low for the regular trading hour session. So we've got a normal variation trading day with a kind of a low excess low here. Well, obviously, we're trading lower right now. This is the overnight session, largely in range and in value from the Friday session. So a neutral trading day. We're trying to continue this move to the downside. Again, the IB, neither the high nor the low. Let's take a look at gold now. Gold should be an interesting market today. We've got a market state change possible, although gold is also now in rollover. So we've all the markets that we've looked at so far, crude, the equities, and gold are all involved in rollover, coming into rollover in gold. Volume was pretty good on the way up here on Friday, wasn't it? We also added 15,000 in open interest. Now we've got a market state break change. We went from downside to balance to upside. We can see this market continuing this way. Of course, you're going to watch the dollar. Uncertainty in the U.S. Banking system, of course, that's going to weaken the dollar. Potential upside state change, breakout space. There's even space for us to do this. I know my brother Rick is going to be happy about this, right? We got a gap higher, gap rules. We can't close the gap. We look to continue the higher. We got another naked point of control up here at 1941, and another one even higher than that I didn't even put on here. So take a look at the TPO chart. P-shaped. IB extreme low, P-shaped, but an increase in open interest. Short covering meets new longs, continuation, gap. We can't close this gap. I'll be looking for opportunities to buy weakness in this market. And I got to say again, I hate to reiterate so much, that anything can happen. Yes, cost. Gold smells like lower interest rates from now on. There's a lot of folks talking about the fact that we may not change interest rates now next week from the FOMC. this may change their course a little bit. That's the one silver lining in the gray cloud, perhaps. How about the euro? Well, euro, kind of a similar situation. Potential market state change, although I think it's having a little bit of a harder time continuing in this push to the upside. Short time frame balance is at work. Downside structure to balance. A move above last week with some volume. The weekly kickoff high with some volume could then kind of solidify the potential for the market state change to the upside. Weekly kickoff high resistant last night. Now we're back below last week's high. Here's the 30-minute chart. So what are we looking at as far as overnight inventory? We're flat. We got a little bit long. Those have now been reconciled. Inside the range, inside values, certainly try and stay patient, but the market is slightly in balance or out of balance, depending on how you want to look at it. So stay patient with these euros. Take a look at the TPO chart. Initial balance low on Friday. Normal variation trend, normal variation day. These normal variation days are just all over the place, and it's a neutral normal variation day because the TPO point of control is relatively centered in the range. Here's where we are now in range, bordering on value, not in a big hurry for the euro this morning. How about the 10-year? Yes. Downside structure, balance, breakout. We're seeing continued volume coming in. We added 24,000 in open interest on Friday. We're seeing continuation and possible acceptance above weekly kickoff high. If price comes back to that level, that might be an interesting spot for an execution. Market state change here in the euro, the dollar, and the 10-year. Take a look at the 30-minute. Lots of visuals up here for us to take care of. An old gap. We've now just kind of finished that gap. Where are we as far as time? Okay. No, we still have to come and finish this gap in regular trading hours, which gives us that opportunity at weekly kickoff high. Oh my goodness. Opportunities everywhere. Just make sure you protect yourself. Make sure you protect yourself. Here's Friday's profile, excess, gap, the prominent point of control. If we can't close this gap, the idea is to continue to look for weakness to buy. And we'll take a quick look here at the natural gas. So that gas has found a little support at last week's low. Kind of the low end of the area of balance that we have here. 30-minute. So there's our excursion below last week's low. Upon opening at 8 o'clock this morning, buyers have now taken over. We've got a relatively organized downside move last week, as none of the points of control from last week's session were unchecked. We've got to go a ways before we get to one of those, which is actually the other side of the weekly kickoff high. This market is a beast. So there's their weekly, there's our low there. We had a poor low on Friday. We've now left excess below that. So the market does seem to be hinting at potential change in direction. But again, we don't have any TPOs to really go back and check. We've checked them all. Any POCs, I mean, points of control. I'll be looking, I think, to see if I can find weakness in this market to look for an opportunity for a long. I think. I don't know. I wish I did. I wish I did know. And then I could tell all of you what to do and where to do it, but nobody can do that, of course. So that's our goal here, is take a look at these markets, see if there's a discernible context. And the discernible context to these markets today, to me, is that there's no discernible context. Anything can happen. There's no balance. There's no rhyme, no reason. Opportunity, yes, but opportunity for profit as well as opportunity for risk and loss. So be careful out there today, traders. This is going to be one of those days that we're probably, well, I hope it isn't one of those days that in 10 years we remember where we were when. Don't need anything like that. What's the president saying? I don't see a whole bunch of going to ask Congress regulators to strengthen bank rules. We will not stop at this. We will do whatever is needed. We must prevent this from happening again. Blah, blah, blah. Isn't that what they said the last time this happened? Who knows? I'm just hoping that we can protect ourselves, we can get through this, and we can go back to a stable and good economy at some point. Let's hope, right? All right. Yes. Like Rick says, buckle up. Anything can happen. Protect yourselves, traders. That's all I can say. That's all I can say. This is going to be a challenging trading day. I will look forward to seeing you all at 12:30 for the group coaching, or at 2 o'clock for Make Hope Money. Well, this should be an interesting one, end of the day today. And then maybe for a little market reflection after that. So take your deep breath. Stay humble, grateful, creative, and centered in your trading today. It's going to be hard to stay centered. There's going to be lots of things out there that are going to knock your clay off center. Get your clay back centered before you start to build anything beautiful. Be diligent. Be kind to yourself, others. Say a prayer for peace. And I'll see you later on. Protect yourselves today. I got to go put my flak jacket on and then buckle in. Trade well, traders. Good luck today.